Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market update. Hope everybody is doing well and that you guys had a beautiful weekend. And as well, for all of you that were able to view the solar eclipse today, I hope you guys had a memorable experience. I was able to view it indeed. I was there with my mother and it was a great time, guys. Pretty much a once in a lifetime experience for a lot of folks. So hopefully if you were able to enjoy that it did make your day a little bit brighter despite the darkness. So in today's video, guys, we are going to go over a few key items. Namely, we are going to go over the technical analysis for our major tech names and also our major indexes. And we're going to keep this video a little bit shorter, guys. So thank you very much, number one, for the 1,000 subscribers. We finally hit the milestone over the course of the weekend. And as a part of that, I really went over the comments and seen what type of changes you guys want on the channel. And the number one thing was for me to make shorter videos. Now, when I started this channel about a year ago at this point, the videos were always between about 25 and 35 minutes long. And that was really the sweet spot. And as I kind of kept doing videos and whatnot, I felt as though I needed to provide more information. And you guys know me by now. I kind of like to talk a lot and it really extends the videos maybe a bit longer than they should be. So we're going to go back to our roots and we're going to try to keep these videos between 25 to 35 minutes long. And we're going to start doing things in a bit more rapid fire form. So moving on forward, we're going to do pretty much our major technical analysis on indexes, big tech names, and a review of my portfolio and some swing trade ideas. That's going to be the same for the Monday through Thursday videos. On the Friday video, I'll make it a bit longer and recap the week and talk a little bit more in detail about the charts and about the macro environment that we're currently in. So the Friday video will be a little bit longer. In terms of our earnings breakdown, guys, well, we're going to do the earnings breakdowns pretty much in separate videos at this point. So I'll always be releasing every day, pretty much again, right? 25, 35-minute videos in terms of technical analysis. And then there'll be separate videos where I do cover the earnings for the day. So there'll probably be about 2 videos per day during earnings season. So with all that out of the way, guys, thank you very much for listening. Let's now get into the technical analysis portion of the video right away. Before we do that, let's do a quick little rundown of what happened today. So no major macro news. The major macro news is going to come on Wednesday. Very big day on Wednesday. We're going to get our CPI. And as we can see, it is supposed to be about 3.4% is the consensus, which is higher than last month's reading. Now, if it comes in higher than the expectation, which the expectation is already higher than the month of March, the month of February, well, that's not going to be very good for the markets indeed. So key release here on Wednesday. On Thursday as well, we have producer inflation and then not much else for the week. So traders largely anticipating this news to really place more bets, which is why you've had relatively flat movement in the market today, right? 0.06% up on the SPY, 0.03% up on the QQQs, really not much trading, extremely low volume day. Take a look at this volume, guys, right? Everybody waiting for that CPI release because that's going to give us the idea whether or not inflation is starting to uptrend in the wrong direction. So very, very key release on Wednesday. That being said, let's take a look at our earnings as well. Earnings really start off on Friday. Not much until then. I mean, of course, we do have Delta Airlines on Wednesday, but on Friday, all the major banks are starting again. JP Morgan, Wells Fargo, and BlackRock. So we'll be covering a few of those in the Friday earnings recap as well. So let's get into our technical analysis here, guys, right away. So take a look at the heat map. You'll see that on the course of the day, it was a fairly mixed day, right? A lot of intermarket rotation. You can see that best healthcare was actually down on the day. Financials were up. For the most part, relatively healthy market despite all the red that you may see. A lot more names were declining rather than advancing today. Most of your big tech names were indeed down, all except for Google. Amazon actually had a beautiful start to the day, but gave a lot of it back. Tesla with some beautiful outperformance of 5% pretty much after the news came out on Friday that they would be releasing a potential robo-taxi later on in the year. Now, moving on to the one-day relative performance, you can see, guys, half of the market was indeed in the green, led by utility and real estate. That was pretty much as a byproduct of your yields coming down over the course of the day, which impacted your yield, your interest rate sensitive sectors such as utilities and real estate. To the downside, we do have energy, healthcare, and technology, right? Taking a little bit of a breather. So let's get right into our analysis on SPY. And we're going to go through these quickly, guys, because not much has changed. So SPY still in the context right now of a daily downtrend. We're keeping an eye on the size of this bounce. Now, the size of this bounce is a relatively good bounce so far here, guys. we've already taken back 62% of the move. That is the required amount to be able to set up a potential higher low and move into a new hourly uptrend and continue this daily upswing. So the bulls not looking bad. Even though we lost the trend line last week, we are now back above our moving averages, back above the trend line, and we maintain above this horizontal area of support that is crucial to the bulls because it is your areas of the weekly higher lows. This is going to be a lot more important, guys. These horizontal lines, in my opinion, a lot more important than a temporary loss of the trend line. You can go back to previous markets and see why that's the case. You can see, go back to any market really, we can have a very nicely established trend and then lose it, move sideways, and then establish another beautiful trend channel down the road, which is why I put greater importance, guys, on the weekly higher lows. It tells you who is really in control. And so far, the bulls maintain all of that control. So we'll see what happens with that CPI release on Wednesday. Moving on to QQQ. QQQ also pretty much just the same as its counterpart SPY, right? So QQQ losing the trend line a little bit more aggressively. We are in the context of a daily downtrend right now, looking for the size of the bounce in relation to previous Wednesday's high. And the bounce is getting pretty decent at this point, guys. Fairly juicy bounce on QQQ. Take a look at this. The bulls have came up exactly to our 62% ratio right there, which gives them a very good chance at, setting the higher lows and going for this trend expansion, starting to recapture a lot more and get us the daily uptrend back since we've lost it over there. The one key area, guys, is going to be our horizontal resistance. So although we're below our trend line, we are currently struggling with the moving averages. The one key area is this green line of support down here, 435 down to 430, because it's your weekly higher lows. Lose that and you end up in a weekly downtrend. Have not had a weekly downtrend since the sell-off of last fall. So crucial to maintain these lows, especially after the CPI print. As of now, though, the bulls do have a decent amount of space above these lows right here. So we'll keep a close eye over the week, how the week progresses. Crucial for the bulls to hold these levels if we want to save a potential multi-week sell-off. Moving on to XLF Financials. XLF Financials not looking bad at all, really doing a great job of recovering after last Thursday's sell-off. So at this point, guys, we are still in the context of a daily downtrend. The bulls are trying to recapture as much of this move as possible. And so far, the size of the bounce is very adequate, up to, again, 62%. Which leads us to believe they have created enough space to potentially be able to reverse this and get the daily uptrend back that they were able to maintain all this time. We're currently still sitting above the big red box, which is the area of resistance, previous all-time highs. So your bulls still looking healthy, guys. Weekly uptrend, never lost, just looking for the weekly higher low for further trend expansion. Financial is going to be key to see what happens with earnings on the Friday. And to the downside, of course, you would not want to see a loss of 41.20. That would just perpetuate the daily downtrend and would send us into further healthy weekly consolidation. The lower end of that consolidation could bring us down to about 40.2, 40.3. And moving on to healthcare. Healthcare not looking bad either, although they were red today. They are in the process of trying to reverse this daily downtrend into a potential new daily uptrend right here. So take a look at your hourly bulls. Need to get this hourly trend change over the course of the next 2 days if we really want to start getting some size on this bounce. If we can get up to our previous resistance, this yellow line right here, 144.50, it'll give us a great chance, guys, at potentially getting rejected and then setting the higher low, making a second attempt at it, clearing that daily trend change for the bulls, and then potentially getting us back into motion here on a weekly upswing. Now, keep an eye, guys. XLV, one of your first names to lose the weekly uptrend into weekly downtrend. And also the MACD cross is looking fairly bearish to the downside. If we do, for some reason, continue pulling down into lower levels, you have this massive green box of support, which is your previous all-time high resistance area, should now be acting as heavy support for the bulls. And that would be pretty much the extent of a sell-off that healthcare could have, in my opinion, about 5-6% maybe over the month of April, top to bottom. Now, lastly, moving on to IWM Russell. IWM Russell still struggling a little bit down here, right? Trying to reverse this daily downtrend, trying to recapture as much of it. Same principle as the rest of our indexes, right? Really trying to reverse the damage that was done last Thursday. So in the case of the weekly, though, the weekly is looking fairly gorgeous at this point here, guys. Take a look. We are in leg number 3 of your weekly upswing right here. Just looking for the weekly higher low. Key area to defend for the bulls. 202, your 12 EMA, this yellow line right here, and then it's our big area of previous resistance, this red box right here, which should be acting as support. So if ever the bulls continue losing ground and we come down into this area, this is where most of your longer term bulls are going to be sitting, because we're in a monthly uptrend, looking for the monthly higher low and for further trend expansion. IWM Russell, I've said it before, I'll say it again, probably won't get much trend expansion above our area of resistance, this 210, 211 nasty zone right here that we have to get above. Probably won't be able to clear that, guys, until we get more clarity on the direction of interest rates and the timing of that first rate cut. Now moving on to Dow Jones. Dow Jones not looking too bad today, despite its flat day, right? So still in the context of a daily downtrend at this point, looking for the lower high, maybe for the lower low flush. Now, in terms of the size of the bounce now, guys, is not high enough, right? We only got as high as about 50%. I need to see the bulls come up a little bit higher to give us the best chance possible at setting the higher low and the higher high. If ever, for which reason, guys, we roll over and crack last Thursday's low, well, you guys know it's already slightly bearish right now, right? In terms of your moving averages, we're below those. We're below our previous resistance, which was support. We're now below that. So a lot of overhead resistance here, guys. The bulls need to really get it in motion to change this into overdrive to the top. Now, if ever we flush through, we're still looking for further weekly consolidation, guys. Your previous weekly higher lows are getting dangerously close here at 38,500. Lose those and you lose the weekly uptrend. Lower high, lower low would be a weekly downtrend. So still a lot of trading before that happens, right? But if that does happen, just keep an eye, guys. Just looking for the monthly higher low for further trend continuation. There's really no red flags on any indexes for your longer term timeframes, just some short losses here. So we'll be keeping a close eye on whether or not the sell-off continues to get momentum. Most likely that will only be upon Wednesday's release. If we do continue to the downside and indexes as a whole do sell off here, guys, no biggie. We'll just be going shopping a lot down here for our favorite stocks. Keep an eye, MACD cross on the Dow Jones as well. It's now been a few, guys. The SPY has not crossed on the MACD. The QQQ has crossed on the MACD to the downside. Financials, no. Healthcare, yes. IWM, not yet. And the Dow Jones, yes. So you can see fairly mixed, but a few of our indexes showing a bit of red flags that momentum is kind of slowing down. But that could also mean, guys, it doesn't mean we necessarily have to dump, right? We can also just go relatively sideways or, kind of slightly down. It doesn't need to be a waterfall drop. So just keep that in mind. This MACD momentum can just come to the downside, even if we do move a little bit sideways. Now, moving into crypto, let's cover crypto ever so briefly. So Bitcoin trying for the all-time highs, guys, almost back up there yet. So we were doing a great job here, guys. Daily downtrend was started and the bulls have just put in an engulfing move. So any move lower now, just going to be looking for a higher low for further trend continuation. Bitcoin looking excessively good, even if you go to the higher time frames. Weekly higher lows are set, and we're on for the second weekly leg up at this point, if you were to take it from the bottom of this move. So it's looking extremely gorgeous. Monthly, no red flags as well. You can see we hesitated a bit here in the early days of the month of April and looking for that continuation. The halving event is in about 10, 12 days at this point. Usually we do run hard after the halving event, but there could be, after the halving event, guys, it could be a couple of weeks of maybe sideways, but then the next 6 months after has a 100% success rate for Bitcoin price action following the halving, meaning that 100% of the time within the following 6 months, Bitcoin will be higher than it was prior to the halving. So looking very, very good on crypto charts right now. Ethereum as well, going for the breakout here. So we were in jeopardy here. Daily downtrend, we were looking, are the bears going to pull back too much of this weekly move? But now the bulls have said no. Engulfing move over the course of the weekend, looking very good. So now any move lower, once this move is topped out, we'll just be looking for a higher low into higher high trend continuation. The weekly is looking so bullish on Ethereum. Take a look here. Weekly uptrend, right? Looking for the higher lows. Tagged our 12 EMA twice and now back on for another weekly upswing, looking good. The RSI is not overbought right now. Momentum is still looking fairly good to the upside. And in terms of the next push, guys, the only resistance left at this point is our previous 52-week highs at about 4K. And then we're going all the way up to the all-time highs, 4,800. So the bears are quickly running out of lines of defense. Only this guy at 4,000, 4,100. And then it is your all-time high. So Ethereum doing a great job playing a little bit of catch up here, guys. Any dip currently, guys, is, in my opinion, for a buy scenario. For the next 6 to 12 months, crypto is looking excessively bullish. I wouldn't throw everything at it at these levels, but if we do get a little bit more of a dip here, back down potentially into the 66, 65,000 before the halving, that could be a great moment in time to add to your Bitcoin bags. Now, moving on to our big tech list. So Apple still struggling over the course of the day today, 0.67% to the downside. Apple just cannot get a break. So your daily downtrend, unfortunately, simply continues. We flushed the lows of last week ever so briefly. Currently, roughly at a double bottom, but, you know, the bulls really need to start stepping it out, guys. They're running out of areas of support. Next area is going to be down here at about 166.50, and then it's all the way down here at 155, 150. So this is really the last line of defense for the bulls, looking a little bit weak. So I really need to see some outperformance by Apple over the course of this week if we want to start regaining some of this levels. At this point, the bulls need to see a move above your Thursday high to really start engulfing, give ourselves the best chance at resetting the daily uptrend. But first things first, we need to get that hourly trend back first. You can see they did it a little bit here back on Tuesday before getting crushed on the Thursday session. Need to see that recapture if we want to start our daily move higher. And now, you know, put in some analysis for whether or not the bulls can really recapture the mid 170s and start our march higher towards the 180 level again. So Apple looking slightly weak, but I do still like it. I will still keep playing it down here in the 166, 167 level here, guys, because we are still currently in our big area of support. And that area of support at this point, guys, is roughly 2 years old. So it's a big one, very big one for Apple. Looking forward to see how this one plays out. Now moving on to AMD. AMD not looking bad at all, up about, well, actually down. It was up, down 0.31%. So AMD still in the context of this new daily downtrend. That's no secret, right? We've been in this daily downtrend for a long time. Bear flag right here. And now once again, another daily downtrend has started. So the bulls are trying to get a bounce going, but they really haven't got the hourly trend change just yet. So once we do get that confirmed hourly trend change, hopefully into tomorrow's session, we'll be looking at the size of the bounce in relation to the Thursday drop. As of now, the size of the bounce is not sufficient enough to guarantee that the bulls have a good shot at setting these lows and regaining the daily uptrend. I need to see a little bit more from them, potentially moving all the way up to about 176, 177, maybe getting rejected there, coming, setting the higher low, and then retrying for this above area of resistance, which is sitting about 183. So big area, 180, 183, moving averages of resistance, previous level as resistance as well. That's going to be the challenge for AMD. However, while we're in these lower zones right here, I still do believe riding short puts 160 down to about $155 is a very juicy trade. We are currently in big weekly support, which was our previous all-time high resistance as well. So I'm looking for the bulls to protect this area at least on the first drop down into it for a nice little bounce play. Thereafter, what happens is anybody's guess, of course. Once they come into here, I am saying we are guaranteed at least one bounce at that point. Remains to be seen whether or not the bulls can hold this area, but AMD looking fairly good. Their earnings coming up only in the end of the month of April. So I really hope that the bulls are able to protect this zone until that earnings event. Now moving on to Amazon. Amazon with a great day, however, giving most of it back. So Amazon at one point in the day was up all the way to 187.42, which is very close to our previous all-time highs that were about, you know, about 188. So that's really what's acting as our last line of defense for the bears right now, but the bulls really doing a great job of pushing consistently into that area. So daily uptrend, no secret there. Any move down at this point, going to be looking for a higher low, anything pretty much above 179, higher low for further trend continuation. And now that we're above our big area of congestion, right, 178 to 180, that was the previous area we were looking to break out of. We're now above that, so the bulls should be able to use this as support if ever we do have a more extended pullback into that area. Just looking for a weekly higher low into further trend continuation. Amazon still one of your lead bulls in amongst its tech peers, right? Looking very good, nothing bad to say. Just curious to see if Amazon can really clear this all-time high over the course of this week. If your CPI read is more bullish than expected, I do think Amazon is going for those all-time highs. Now moving on to Google. Google also looking very good today, 1.43% to the upside. Very bullish day on Google. Google doing a great job here, guys, at protecting this daily uptrend, right? So your daily higher lows were set last week, 151.11. We're just looking now to crack our previous all-time highs for continuation of that daily uptrend. The weekly is also looking extremely bullish after being in a weekly downtrend here for the month of late February into March. We have now recaptured this in one single leg up. No weekly higher low set just yet. So as soon, if ever we lose this daily momentum and set a daily downtrend, that will just be for very healthy weekly higher lows. Weekly consolidation, looking for the weekly higher low for further trend continuation. At that point, guys, I'd target the 148 to 150 zone. Seems to be a very juicy area where the bulls can come down and find some previous support levels, especially when we take a look at the weekly. So Google is looking extremely bullish. Now, well and clear above our prior all-time highs at about 151. And the company's valuation, even though we're above the all-time highs, is extremely good. So looking very good, all things considered on Google. Google and Amazon, two of your lead bulls, with the next one, Meta. Meta also one of your lead bulls, maintaining those all-time highs, even though they're down 1.53%. Daily uptrend clearly underway. Meta's chart is beautiful at this point. Any pullback at this point, looking for a higher low, anything above 482, just looking for daily higher low for further trend continuation. Now we are above our previous area of resistance, about the 515 level. So that will be your first area where the bulls do have some defense, and the 12 EMA is right there as well. So can we see something like a little bit of retest in this area before further momentum to the upside? Yes, because Meta is one of your lead bulls. Nothing has changed there. The weekly is still looking extremely bullish, never lost the weekly uptrend amongst all of this upside momentum. Just a little bit of consolidation here, and we're back to it pretty much. So that's very healthy move by Meta. And then again, they do have very serious support down here, 490 to about 480. Huge zone. So still a ways away from that. We'll tackle that if we come to it. Just everything looking extremely gorgeous for Meta right now. They have earnings on Wednesday, the 24th of April. No red flags as of yet on your price action. Now moving on to Microsoft. Microsoft not looking too bad either. 0.22% to the downside, but still just some consolidation sideways by Microsoft, right? So after breaking above our weekly range of consolidation, you can see they did that here. Nice move up, weekly consolidation, nice move up, weekly consolidation. Now we broke out and we're retesting the top end of the range of consolidation. Couple areas of confluence, right? We have our upper end of the range, which is currently sitting at about 415, and that is really having nice confluence with the 12 EMA, this yellow line right here that's curling up into it. So really Microsoft does have some juicy support levels down here at 415. Remains to be seen if the bulls can protect that. If for whatever reason CPI is bad and the entire market nukes to the downside, we will just be caught back down into this range. No biggie, guys. Microsoft has huge support here at the lower 400 bound. So we'll tackle that if ever we get there. But as of now, the bull's looking extremely strong. If you see this consolidation on the daily, you may be wondering, is Microsoft strong or not? Just zoom out, guys. When in doubt, zoom out. Zoom out to the weekly. This is a weekly bull flag for further trend continuation. Microsoft looking extremely good, and their earnings Wednesday, the 23rd of April. Now moving on to Netflix. Netflix not looking bad at all, 1.22% to the downside after this nice engulfing move last week. We've now cracked the highs. We've now regained our moving averages. So the daily uptrend is now up to the bulls to get. We lost the daily uptrend. We had it back here, but the bears flushed the lows, right? Now we lost the daily uptrend, so it's up to the bulls to get that back. So at any moment in time right now, any move lower, just going to be looking for the higher low for further trend continuation to the upside. Netflix not looking bad at all. Just need to protect these lows down here, 603. So still a lot of space for the bulls to be working with here to protect that daily uptrend. In terms of the weekly has pretty much never looked better, right? Beautiful weekly continuation of the uptrend right now, and currently in another leg to the upside. So anything on the weekly, anything above 592, just still looking for a weekly higher low for further trend continuation. A little bit of sideways action by Netflix over the past month and a half. But overall, it's just a grinder of a stock. It's just grinding higher, guys. It's not pretty, but it works, right? On the monthly, keep an eye on the monthly. Bulls in full expansion mode right now. No signs of slowing down on your momentum as well. Your all-time high is going to be the next area of resistance up, sitting up at about the 702 area. So everything looking very good, even though on the weekly, kind of elevate on the RSI, kind of cooling off on the momentum of the upside. It's normal, no red flags as of yet. I would find it to be a very good buying opportunity if we drop, let's say we have earnings coming up in about 2 weeks, Thursday the 18th. If we were to drop back to 575, this huge area of resistance right here, I may just be tempted, guys, to make a little bit of a play for the monthly higher low for further trend continuation over the course of the year. Moving on to NVIDIA now. NVIDIA, 0.99% to the downside. NVIDIA really hasn't been too strong in the last 2 weeks. Just still sideways consolidation for this stock. Now, 850, guys, is going to be the line in the sand. Why is it so important, guys? It's the lower end of this range of consolidation. So NVIDIA right now, yes, you could argue that it is in a little bit of a downtrend. However, that is still just healthy weekly consolidation. The reason this level is so important, guys, is because if we lose it, there's really not much in the form of support until pretty much your 750 range, right? The whole 800 down to 750 is the next stop if ever we were to break down below 850. So 850 is on the watch for me this week. We're below the 12 EMA, something that we've held pretty much since the start of the year at this point. So it's kind of curling over. And even on the weekly, guys, you can see momentum not the strongest, even though it is still green, cooling off on the RSI, and now starting off our third red week in a row. Obviously, a lot of trading left in the week, but still notable that now, after about 2.5 months, 3 months of trading to the upside, we are finally consolidating in a healthy fashion on the weekly, just looking for a weekly higher low. And you guys know me, I've said it on the channel, if for ever which reason we come down to 750 because the rest of the market has a technical sell-off, 750 is my buy zone for NVIDIA. 750 down to the earnings gap fill at about 691. That would just be so juicy, guys. If it does happen, I'm not saying it is going to happen, but if it does happen, I'm letting it come to me. 22% sell off. I'm starting to buy at 750 for the eventual monthly higher low into further trend continuation. I have no doubt in my mind that NVIDIA could probably hit $1,000 over the course of the year, even if we do pull back into this range over the short term. Now, moving on to Tesla. Tesla not looking too bad at all, 5% to the upside here today. So Tesla, guys, they did say last Friday that they were going to release a potential $25,000 robo-taxi, but it was not all that it seems. However, there's a big debate going around online right now, whether or not the taxi, there was an article by Routers that came out last week, and it was saying how that robo-taxi that may be coming out for Tesla may not be what people were expecting. A lot of people were expecting, well, if I have a Tesla, I'll just basically I'll be able to just lend my Tesla out to the network and it will taxi people around for me and I'll collect passive income. Now, the rumors that are now coming out of some Tesla inside information, guys, is that maybe Tesla is going to use those cars for themselves. So you're not going to be able to lend out your Tesla to the network, but Tesla will be able to generate its own vehicles that it will lend out to a robotaxi network. So very big area of contention right now. It's causing a lot of controversy around Tesla stock, especially on Twitter. So with that being said, the news has been received positive by Wall Street because it does represent a potential new sales vertical for the company, which has been good. In terms of price action here, we're still really trapped here, guys, in this daily downtrend. Now, the bulls have done a great job here over the last 2 days of really creating a lot of lift on this bounce. You can see the bounce very juicy, right? We've taken back about 80% of the move from last week. So daily downtrend, recapture 80%. Now the bulls are looking to either engulf or just create enough space, which they have, to set the daily higher low into higher high, get a little bit of an uptrend going here, guys, before earnings come out on the 23rd of April. So what they're looking to do, they're just trying to get as much space between them and these lows prior to earnings as possible to avoid the potential flush of the 152 zone, which is your last line of defense on Tesla stock. I will personally not be touching this stock until earnings come out because I want to see what management has to say about the demand difficulties and the ongoing price wars that Tesla has been having. So Tesla looking fairly good, but as I said, there's such a big catalyst coming up here, guys, that price action should be fairly muted. I'm not expecting a flush of 152, just as I'm not expecting a rally above 200 before earnings. In my opinion, we're probably going to stay range bound here, guys, between about the 180 and 160 level until those earnings do come out. Now, moving on to Palantir here. So Palantir not looking too bad, 0.17% to the upside. Palantir, right? Really in the context of this new daily downtrend. Keep an eye on the bulls. They're trying to reverse this right now. So the bounce as of before Thursday's flush was fairly good. Looking to set the daily higher low into higher high. Who's in control of the short-term timeframes? It is your bulls. They're trying to recapture this hourly trend. If we can maintain that trend change into tomorrow, your daily bounce will have more lift. And if we can get as close as possible to 2411, it really sets up your bulls nicely to set up for the new daily trend change. I would like to see us get back above this yellow line right here, 23.11. Get me back above here, get me back above the moving averages, and the stock is going to look really healthy for some short-term price action to the upside. Looking very good on Palantir, and we're trying to set the weekly higher lows as we speak in the context of this weekly pullback. I still maintain that if Palantir stays close to these levels, I'll still write short puts 21.50 down to 19, my sweet spot on Palantir. Why? We're just looking for the monthly higher low retest of this support zone. Huge previous support. Resistance should now be support since we're above it. Looking for the breakout into the $28 range. So I'm looking to accumulate some Palantir down here in the lower levels and potentially start riding it up to the high $20 mark. So Palantir, not looking too bad. Juicy zone approaching. Now moving on to PayPal. Lastly, PayPal, beautiful day today, 1.83% to the upside. So PayPal was in a gorgeous daily uptrend. We've since lost the daily uptrend by cutting these lows right here. And we were looking, can the bulls save the daily downtrend? That would be a loss of last Tuesday's lows. Now, we have now recaptured the daily uptrend just as easily. So bulls back on for leg number 2. And now on terms of the weekly, guys, since we've recaptured the daily uptrend, you can argue that your weekly higher low is now set at the low of last week's trading, looking for further trend expansion on PayPal. As of now, it's looking very good, guys. My next target on PayPal is going to be about the $75 mark. We're respecting a few key things right now. We are above our downtrending channel line that lasted 2 years. We're also above our 200-day moving average, this green line right here. That also we have not been above for the past 2.5 years at this point. It is everything coming together right now in terms of a breakout pattern, at least on the technicals. So PayPal looking very good. I still maintain, if for whatever reason Wednesday is a negative day for CPI, at that point, if we do sell off here over the course of the next couple of weeks, I am looking to make entrances, guys, $63 down to $60 for PayPal, because I'm looking for the longer term swing trade here, guys. We're looking for the expansion right now of this new monthly uptrend. We have not had a monthly uptrend since the year 2021, pretty much. So everything looking very good for PayPal. I may have missed a little bit of an opportunity down here, was getting a little bit too greedy with it potentially. So I won't make that same mistake again, guys. If we do come back down to this area, 63.50 all the way down to 61, I'll be averaging into a position to looking to play for that long-term rally up to 75. So that's pretty much everything I had for you guys in terms of stocks today. Now let's cover a few of the trades that I made in the portfolio. So taking a look at the trades made today in the portfolio here, guys, you'll see that a few of them were featured in my last night's top 5 options plays. Now, keep in mind, I did not get the best entry for these because today I was kind of occupied with the solar eclipse, running around trying to get glasses for me and my mother as well. So I didn't really have that much time to trade. That being said, the setups were there and I did get some fairly good premium for them. So take a look at what we have on the week. Now, SoFi, these 7 puts that we wrote last week, those are pretty much worthless. Just really looking for them to get pretty much bought back at a penny at this point. But SoFi was a great trade. This was one that was made last week. So we're pretty much 95% profit right now. Not a large profit, but the trade idea was beautiful. I talked about it a few times on the channel. So happy to see that we are pretty much worthless, collecting all of that premium. Now, the second trade I took today was AMD. So the AMD 162.5s, I would have loved to get the 160s. I just did not hit my chart fast enough early on in the morning here, guys. So AMD early on in the morning really had a great gap down open down to the 168, 167, even high 166 levels, which did open up the 160 puts, guys, for about 80 cents. And they ended the day, those 160 puts, they ended the day about 25 cents. So in one single day, if you clipped it down here, you would have already been in 70% profit. I was not as fortunate. I took them a bit later on in the day, right around noontime. And so I was able to write one strike higher here, still well within our expected move, right below the expected move of 163.50. I like the 162.5 level. Nothing wrong with that. It's really towards the lower end of our support range down here, right? This green box that we feature when we go over AMD technical analysis. So looking fairly good on those guys. Got my 0.5% pretty much. We were in for pretty much 90 cents on the bid. Now, we did also write some Alibaba for 46 cents a pop. So that's well above our 0.5% rule. Alibaba, just looking at average down in my current position, right? We got assigned a couple months back at 82, and ever since then, we've done a great job of writing a ton of premium. I'm sorry if it's small right here on the screen, but that's how many contracts we've written so far in terms of covered calls and more short puts down here. Much the idea is the same, right? So looking at the 71s, just looking to bring my cost basis down. It's currently sitting at about 76.52, and 71 is getting very close to our big area of support that the stock really has not broken down much into. over the course of the last 5-6 months at this point. So I like the 71s, not going to be nervous about that one at all. We'll see if I get an average in trade for Alibaba. Now, moving into the next one, guys, you'll see that I do have the Expedia 133 calls. So I wrote these last week. I actually wrote 2 contracts on Expedia last week, one at the 133s, one at the 132s. I closed the 132s a day after I wrote them. I told myself, you know what? That's a bit too high exposure considering the fact that Expedia could potentially come down into the lower 125, 120 range, and that would be where I want to throw a second contract at it. So I closed the 132s last week for roughly break even a day after I wrote them, and I stuck with the 133s at the higher strike that I had. And we did get a sign since Expedia did close below 133 last week, and we were able to write some juicy covered calls on them. So take a look, guys. Expedia covered calls, we got about $1.60, $1.57 for them, well above our 1%. So our average cost on Expedia right now is sitting right about the 131, slightly above the 131 level, actually slightly below the 131 level. So looking very good. We are still in profit on this position as a whole. So we'll see what happens with that one over the course of the week. Now, one of the before last ones, guys, is going to be Intel. So Intel, we wrote the $37 puts. Now I do have another Intel position running concurrently with this one that I took last week. These were the 39 puts that I wrote last Thursday-ish after the big 8% drop, and I got about 28 cents for those. Now Intel is trading below 39, but I did want a couple of these contracts. So this week I went with another position on Intel going for the 37s. So we got about 22 cents on those, which does respect our 0.5% rule, and they were featured in yesterday's video. I would have loved getting the 36.5s maybe, but at this point, guys, I'm happy with the 37s as a whole. It's really the lower end of this big range of support. And if we come down into the 36s, guys, I do believe the bulls are going to put in a heck of a fight down here. So I'm happy with this position on Intel. We'll see what happens with both of these trades on Intel for the week. Really would not mind being assigned shares of Intel down here, as I do believe we'll have a significant rally as well with the rest of semiconductors when that sector comes back. But as a whole, guys, semiconductors has not been too hot, right? Over the past 1 month, you can see that for the most part, guys, semiconductors have been red, slightly consolidating down or roughly flat on most of those big names. So looking for that bounce play. Lastly, we have a Shopify position here. We took the 72 puts. I was talking about it in last night's video. And this was another one where I didn't get the best entry. The best entry would have been first thing in the morning at the 9:30 open. I got a little bit later down here, currently right around similar prices to now. And I was really looking for the week as low as possible, close as possible to this $70 mark. So 72, 71, 70 was what I was looking for. And I was able to get those $72 puts. We got about 45 cents for them, which is well above our 0.5% rule. So very happy about that. Now, moving on to Elf Beauty. So Elf Beauty, we did have a position that I opened last week on Elf Beauty. We wrote the 152 fives after Elf Beauty had like a -8%, 10% day last week. We got $1.60 for them for about 9 days of trading, as you can see right here, right? And we were able to close those today for a very juicy profit, guys. Close them for 31 cents. So pretty much pocketing about 80% in just 3 days of trading. And I really used that exposure, right? The $15,000 exposure. I used that and I just wrote the AMD ones instead. That's why I closed the Elf Beauty trade. There was still some meat left on the bone, but I closed them for 30 cents and we got AMD for 90 cents. So just reallocating the exposure, right, into a different trade. Here you see the Expedia assignment over the weekend, and here you also see the Palantir 2150s expiring worthless because Palantir ended over 2150 last week, looking very good. In terms of the rest of the swing trades, guys, nothing's changed. Still have my Apple calls, although they are not looking very good, I must admit. We will hold them, expecting an Apple bounce. I'm going to give Apple maybe another week, week and a half, 2 weeks at the maximum for these calls, guys. I don't know for sure if I want to hold them into earnings. Depends what Apple's doing prior to earnings. We also have the Amazon Leap call, which is currently up very beautifully, guys. At this point, you know, we're up pretty much almost $7, right? Let's call it $6 for now on these Leap calls. Still a lot of time left on them. So looking forward to just maintaining these over the next 6 to 9 months. And then we still have the same swing trades. I have not added to MELI, looking to add a couple more shares if we maintain this lower level down here into the 1400s, right? If we really start dipping hard into the 1400s, that's where I'm really getting interested for MELI, looking at the monthly higher lows potentially being set, looking at the mid 1450s, beautiful previous resistance, moving average right there. So if we pull back down into the 1450s, I love this stock. Such a juicy valuation as well. Just being caught kind of in a little bit of a downtrend here pretty much ever since your earnings. But I love their earnings call, to be frank with you guys. And I'm also looking to build out further a position. Still have SPGI, haven't added to those, although I would like to. Nike, not high enough for covered calls. Baba, we went over it, and here's the exposure that I have to Apple currently. Still in these 200 shares, not high enough for me to be writing covered calls on my cost basis of about 176.64. It's actually lower than that. It's closer to 175 with the premium I received from the puts. So as long as we don't trade back up to 175, 176, I can't really write any covered calls. So hopefully you guys enjoyed today's video. That was pretty much it. And hopefully you guys enjoy the new format where I try to make these videos a bit quicker. If you did, consider dropping a like. And also consider subscribing to the channel. Really helps me out for the channel growth, guys. Thank you so much once again for the 1,000 subscribers. Here is a cheers to many thousands more. And as usual, if you have any questions, guys, feel free to leave them down below in the comments. I will answer you usually within the first 24 hours. So everything looking fairly decent. Just got to keep a close eye on that Wednesday trading. As of now, no immediate red flags for the bulls. The levels of the red flags will be in play after CPI if ever it's a bad day, and we will tackle that battle when we come to it. Take care, guys. Happy trading. I'll see you tomorrow. Peace.